April 10, 2024. This is the S&P 500 E-Futures Mini on the 2000 tick chart using NinjaTrader 8. There was two times economic data came out. One was right here at 5:30 Pacific Standard. It was the core CPI numbers, and it looked like when it came out, the market reacted quite negatively and it sold off. The second one was around 11 a.m. Pacific Standard, which is about right here. This is the release of the FOMC meeting minutes from last month, but it doesn't, those type of economic data releases isn't as, the market doesn't quite react to it as badly because it's already a month old. Everybody already knows that they didn't change the rates, but it could whipsaw depending on what was said in the meeting minutes that people could glean from. But usually those type of things, as you can see, it didn't really do that much. Today overall was a pretty volatile day. There was a lot of volume, a lot of second entries that were setting up, but they weren't high probability for one reason or another. Like the signal bar wasn't quite good, or it just looked a little iffy, or it was on the wrong side of the EMA, or it just didn't quite look right. But I did mark a few setups, and I took a total of 3 trades. I lost one, but was profitable on 2. Part of the challenge today was trying to find, when it was consolidating, trying to find clean trading ranges. Now, you could argue that most of the price action looked like it was happening within this big. Well, I don't even know where to put the bottom of the trading range because here it never confirms. Here only touches once. Here only kind of touches once. And if you put it up to here, let's say you put it right here, this is your main dominating trading range. It was hard to trust because by the time it comes up to here, it's maybe confirming maybe a second time with this big overshoot, and it doesn't really come back to touch it till roughly the end. And then the lower side, it's hard to really trust this as a trading range to take trades off of. So what I did mainly today was treat it as a bunch of swing legs and trend lines. So it was mainly trend channel rules today. There were a few areas of, I guess, trading range consolidation, but again, they were a little tricky because they didn't obey clean. And what I mean is they'll sometimes like overshoot, create a small little break, and then each time it did that, it wouldn't consistently go at the same place. It might be even lower than before, slightly higher. So it's just very choppy. So this is the pre-market. This is when the core CPI data is released at 5:30, and you can tell from the timestamp of this candle, this happened in a matter of like a few seconds. So this is from here all the way to about right here. I'll just mark it off with this big rectangle. All that huge drop happened in 1 minute. So if you were in this trade and you thought you were going to go long, you likely would have gotten stopped out. If you were going to go short, you might have also gotten stopped out because during this big drop, it's whipping pretty badly. So unless you kept your stop losses huge, which increases the risk, there's a good chance you could get stopped out, even if you try to keep your stop loss, pretty tight or even pretty large. It's just very risky. But fortunate for me, I don't trade the pre-market like that. I just don't even trade the pre-market. So it kind of falls down. It kind of consolidates at the bottom. And at this point, I have no idea if it's going to be a trading range day or if it's going to recover, rally, or sell off. So I'm just kind of sitting on my hands. So this is the open. I saw this previously and I didn't do anything, which is good. It looks like prices are moving up this channel. I saw one leg up, pull back a second leg up. It didn't quite reach the measured move of the second leg yet. So now here, this white section is where the market actually opens into regular trading hours. You have a new high here. You have first entry long, pull back. I'm looking to see if there's going to be a second entry long. It breaks below the EMA. I'm not too keen on looking for a second entry long now. And I wasn't sure this was a trading range just yet, so I treated it as a yellow up channel with a break of this green down channel leg. Technically, you have a second entry right here, so it's from here. You have first entry long, pull back. You have a second entry long here, but When I saw this in real time, I'm not thinking of going long just yet because although it looked like there's some kind of respect being paid, I don't have to the support. I don't have confirmation to trust the support yet. So although this is a nice bar, it is below the EMA. EMA is starting to flatten out, but it hasn't confirmed to be flattening out yet, so it could still act as a resistance. So I didn't want to take anything here. If you did, off the basis that it's a second entry long, you probably would have gotten profitable, but I don't like that kind of setup. Price then kind of moved down, consolidates. Okay, so now it makes two legs up. So after this break of this yellow up channel makes one attempt up, pullback makes a second attempt up, so like a second measured move. So I saw this. Originally, I was thinking the top of my trading range was this darker blue line. Later, I dragged it up to here, and the lower part was maybe down here. In any case, I saw a potential fail breakout and possible trade because it made two measured legs up, break of the yellow channel. It did already achieve the highs, or attempted to make the highs of this yellow up channel, and it completed a measured move. Plus, it is a new low here. First entry short, potential second entry short. When this candle formed, I thought, okay, there's probably a failed breakout of this original dark blue line as my top of my range and a failed breakout. So I thought, okay, there's also potentially enough room if this candle here were red, it would have been a really strong signal bar. But since I saw something like this, I wasn't ready to take a trade yet because it could still push up the second time. When I saw this, I was thinking, oh, I don't know quite what I want to do. I'd rather have this have been red, but it unfortunately wasn't, so skip the trade. Turns out it would have worked nicely. Now here's part of the problem that I saw with today drawing trading ranges. You see, if I put my range here, it doesn't really confirm. If I drag it up a little bit higher, let's here, it confirms here, but then I have these breakouts here, and now it's not confirming down here. And it's just kind of floating above. So if I keep dragging my bottom of my trading range up, it's squeezing the range and it's negating the price action that happened previously. So I kept it down here, but it's just an ugly, not clean trading range. Breaks out, potential fail breakout here. I saw this as a new low. It's a first entry short. And unfortunately, you don't get a second entry short. There is a fail breakout, but it didn't even give you a higher low because ideally this would have ticked one tick above and flushed down, but it didn't even do that. So I didn't have a trade ready. Didn't see anything I particularly liked. Comes down and here kind of confirms a third triple test and confirms potentially this trading range might be valid, although it isn't very clean because you had some space up here, some space down here. Bounces. Now looks like it's having trouble getting back to the top of the trading range and it's starting to break through. I saw one leg down, push up, a second leg down. So it's two measured moves down, and then it's still in this trading range. So it's kind of ambiguous because there's things going for things that you can make an argument to go long and things you can make an argument to go short. Definitely a failed breakout here. Makes one leg up. I had this big push up here, but there was no way for me to see a way to get in on that trade. Has this yellow up channel, breaks, makes one attempt up. It hits the new high, keeps going. And so now I'm looking back and I'm thinking, okay, it made two legs up. It's consolidating. Maybe there's going to be a big push upwards now after this consolidation. So I drew this purple up channel. Now, I will admit, when you look at the final product of the way I drew my charts, I'll just go ahead and zoom out completely. It looks very messy. It's because I kept my lines here for my chart review, but in real time, it to me makes sense because you're not as concerned about all these previous lines as you're kind of drawing these lines in real time. So at the end of the day, when I look at it, it does look messy, but since I knew what I was looking at and what I was interpreting in real time, it it looks messy after the fact. So it moves up on this purple channel. It breaks as one first entry long, pull back. Technically, you have a second entry long here, but it's not a good signal bar. Goes back down. I don't have this red channel drawn yet, but it does make one leg down, pull back a second leg down. So now it's making two legs everywhere, but they aren't clean or safe entries in my opinion. So you have a new low here, first entry short, second entry short. This isn't a very good signal bar to go short on, and it's above the EMA. The EMA doesn't quite help out too much, but still, I like it to have an extra confirmation on taking a short if the EMA was above my setup. Pushes back up. It gets kind of jarbled. There's one big push up here, so it's like a green channel up. It makes the first entry long. Here I'm thinking it's about to make a second entry long to test the highs of this green up channel. It creates a very strong closing bar, but it didn't quite break above. So I actually thought that this is worthwhile because it went pushed up, broke out, made one attempt up, pull back. Here it's starting to make a second attempt up to test this high. So here I actually took my first trade and I actually put it one tick above this guy. Actually, I took it at the highs of this guy. I got filled, went up, and then it kind of bounced around and it closed above my entry. So I'm thinking, okay, this is great. This is a very strong bar. This is another very strong bar. It should be enough to get me a quick scalp. And the EMA is looking like it's acting as support at this point. Unfortunately, the next candle that kind of fakes me out and flushes down and takes out my stop, which is right here. So my first loss, first trade of the day, made two legs down. Here, I drew this red up channel or this red trend line here, and I put it the other side here thinking, okay, there might be a bigger channel here. Definitely some kind of support here. And I saw one leg down, pull back, second leg down. It bounced very strongly, so I'm having more confidence in this red up channel or this red up trend line. Pull back, and it creates this higher low. So it just came from this big bounce. It made one attempt up, pull back, second attempt up, pull back, and it created a higher low. So I decided that this might have enough momentum to push up. It created two visual legs down. And so I'm thinking it's a pretty strong close of the signal bar. This should be enough for a quick scalp. So I entered here, and this candle was able to get me my quick scalp. And I moved, when I saw this kind of struggle and close, I just moved my runner to the same place as where the scalp was. So got my runner out here. It looked like if I kept followed my rules and kept it pretty much right here at the at where my entry is plus one tick, I might have gotten stopped out. Prices move up, so there's like a one red trade, one green trade. Hits this consolidation area, technically you have a new high, break of this yellow up channel, one attempt up, pull back. You could say this is the start of a second attempt. I just didn't like that this is potentially hitting a consolidation area and there wasn't enough clean space to get a clear scalp out. Prices in consolidate, chops around as a fail breakout here. It just gets very, very congested because these candles are just almost the same highs side by side. I stay out of stuff like this. Pushes up. Technically, you have a new high, first entry long, pull back. You technically have a second entry long here, but it's far from the EMA. It's just kind of out there in the middle of nowhere. So definitely no safe trade in my opinion. Pushes up. So here bounces, it pushes and pushes out of this red channel. So I'm thinking this overshoot could have a correction and back down maybe to the bottom of this red channel. Goes back down. It doesn't respect the EMA. It starts pushing through. I drew this yellow down channel. And here, this is what I call a hunch trade. So what I saw was there's this big overshoot here. It pushed down. It created a corresponding overshoot on this side. It's roughly the same size. Now, this yellow down channel was broken. It broke out and it pushed strongly all the way back in. What I interpreted was it made one tick below and it immediately reversed up strongly. So I like what I was looking at. I was thinking it's going to make a corresponding push on this other side, at least before I get to the EMA. It is admittedly more aggressive. It's not a usual second entry type of trade, It was more of a, I've seen this before. I think there's enough momentum to push through. So I entered, it actually ticked above. I waited for it to come back and it hit my order. I got filled and it closed very strongly. So that gave me even more confidence. Now this candle is pretty large, so it is a higher risk. Plus, this yellow down channel could act as a strong resistance and knock me out. But I saw something here that I liked. I was able to quickly just take out the entire trade, and then it reversed on me. So I was planning on definitely getting out before I got to the EMA. Didn't want to push it above and over. Got the trade, and then it looked like a reverse. So if I stayed too long, I definitely would have gotten stopped out. Now, in hindsight, I will admit this hunch trade isn't the safest and likely should have just been skipped because it definitely was riskier. But it's just something that told me I saw this. I like that it pushed down and pushed up strongly. Then prices move on this yellow down channel. The new low here, it's a first entry short. Technically, you have a second entry short here, but it's no clean setup. It's not even a good signal bar. Didn't do anything there. So it broke out, and it tested the lows of the yellow down channel, but then it continues to push down further. So I'm thinking there's another channel here, which I drew as this orange one. I saw this as a new low. It's a first entry short, pullback, confirmed second entry short. Now, this is what I call an almost trade because I like that it ticked above the signal bar. The signal bar is terrible though because it's very bullish. It ticked above, it hit the EMA and flushed down, but potential confirmation of this orange down channel. But the thing that stopped me was after it closed and I got the confirmed second entry short, there isn't enough room for a comfortable, clean scalp before I hit the lows of this localized low and potentially the low of this orange down channel. This purple one doesn't exist yet, so I left it alone. Looks like if you entered, you would have gotten enough for a scalp, but it is dicey. And if you overstayed your welcome for something more, you would have gotten stopped out here. Prices then continue moving up. At this point, I drew this as a purple trend line down, but it only has one touch, two touch. But the bottom looked like it fit a little bit nicer. There's a little more confirmation down here, but I don't trust this purple down channel enough to look for setups just yet. It moves down on this orange channel, but this orange channel doesn't fit very clean, so I didn't really quite like it or trust it. It's this consolidation area. Originally, the trading range was this bottom here and the midline here. It kind of hits the top. Here is my third confirmation of my purple trend line coming down. So at least I can trust it as potentially a point of resistance. You have a new high here. First entry long pullback. You have a potential second entry long, but I was thinking I'm in a trading range, maybe a triple test here, but I didn't feel there was a good enough trade because it's an area of congestion. There's a doji candle here. It looks pretty neutral. Everything is really tight in this trading range. And my trading range could have been pretty much where this dotted middle line was. And so I'm going to ask it to push all the way up to here. It's counter trend. I'm just not feeling it. Prices are getting squished by this purple down channel, purple down trend line. So it's just something I saw, but it just didn't feel quite right. It would have worked though, but of course I don't know that in real time, so I'm okay having skipped that trade. You technically have a new low here. It's a first entry short, second entry short. There are two legs up. This isn't a very convincing bar to go short on when you see this, because you do potentially have the top of the trading range. But then you see this next doji candle, and definitely this indecision candle makes me hesitate to even go long or short. It's just more sit on hands and wait. You don't get a higher low, unfortunately, to confirm the pushback down, and it just kind of fails to meet the bottom side. It breaks out of the purple down channel. It starts moving up on this green up channel. Breaks out here. Nothing feels safe right now. Here, I did see a new high. It's a first entry long pullback. Creates a second entry long failure. Now, this is what I call an almost trade. This is a really awesome signal bar to go take a short on this failure. The thing stopping me from this almost trade going short is I'm running into this possible support, which looked like it has held previously. There was some violations here, definitely, but it's hard to know, even with this potential fail breakout push back down, that I'm going to have enough momentum to scalp out. Ideally, this candle wouldn't have been so, I guess, had this very long tail. Like it would have been, the setup would have been a little bit higher up to give me enough room to scalp out before this potential support. So it's an almost trade. I'd skip it. Looked like it worked though. Prices then continue moving down, breaks out of this yellow channel, hits this consolidation area. It gets very, very congested. You get these small little doji candles, this doji here, kind of like this shooting star here. It's just very, very tight trading. I don't feel comfortable. The new low, it's a first entry short. Technically, you have a second entry short failure. Now, here, I'm not thinking going short. There's an inside bar. I don't like that. Here, it breaks down below and pushes up. So if you're thinking failed second entry short, that could have been a trade. It's just, it happened very quickly, and I needed this candle to close to feel confident about it. And when it closed, now I feel like it's too far. It's too far from the EMA. It's too far to try to chase this trade because I don't quite know what's going to happen. It pushes up and it moves up on this green channel. So definitely there was maybe a trade here, but not in my eyes because I'm just not experienced enough to know what to do for this particular setup. It's this consolidation area. It just gets very choppy again, breaks down below the EMA. You have a U high, first entry long, technically a second entry long. It engulfs this previous signal bar, but the signal bar is bearish and below the EMA. So even though it is a second entry setup, break of this yellow down channel made a new low. It feels risky. And I suppose if you did take this trade, you probably would have gotten your scalp here, but you'd have to sit through this kind of nervously. And I'm just didn't really like this setup. Prices then move down. It falls into what I think is this red down channel, but it doesn't fit very clean. You have a new low here, first entry short, pull back, potential second entry short. Now, this second entry short is a possible trade. It's a break of this red down channel, and you're looking for a test of its low. But what I also didn't like is this is a 4-point candle, so it is rather higher risk, but you do have enough room to scalp out before you hit the lows. Looks like you would have had to put it pretty much at the lows here, and it would have worked. Prices then continue moving down. You get a lot of these little doji candles spread throughout the day, so it's a little bit harder to trust setups when you see these type of candles contributing to your setup. Prices move, and I'm thinking there's some kind of support here and some kind of resistance here. So I thought I was in a trading range right here. Technically, you have a new low here. Well, you have a new low here. It's a first entry short. You have a second entry short, count resets. You have a first entry short, second entry short. Here, I don't have enough candle price action to tell me to trust that this is the top of the trading range, but this is a very nice push down. Looks like if you did try to enter it, you would have gotten filled. Depending on how many points you're going for, you may have gotten stopped out right here, or you may have gotten the scalp here. Prices then move up on this yellow channel. It gets really whippy. This is right where the FOMC meeting minutes were released. It's a new high, first entry long, second entry long. This is a bad signal bar to go long on. And technically you have a higher low here, but this is a bad signal bar to go long on this higher low. Pops around. It just gets very congested here. Again, you have these dojis, so it's just a very kind of indecisive day. You could just look back at the price action. It's just been going everywhere, up and down, up and down, up and down. And even when it does that, it doesn't even create clean trading ranges to feel comfortable with. So it breaks down, breaks through, kind of chops around. I'm thinking there might be this potential trend line support, and I drew the trend line resistance up here. I didn't color it in because it's just kind of iffy right now. You do have a new low here, first entry short, second entry short here, potential top of a trading range, but the problem with this trading range is it doesn't have a clean delineated resistance, and the support is starting to trend up. So it's almost like it's wedging. So not the best setup. Breaks down on this green channel. New low. It's a first entry short, second entry short. Nope, it's only first entry short. Hits this consolidation area again. These are just kind of like really tight candles. I don't particularly like them. Moves up on this yellow up channel. It's a consolidation area. I see one potential leg up and maybe a second leg attempt up. It doesn't happen though. It kind of flushes down. I'm going to go ahead and delete these. Prices move down on this orange channel. Again, you look at all these dojis, so it's just all these indecisions. Bulls are not in charge, bears aren't in charge, but the overall bias says the bears are in charge. It's just hard to trust whenever you have to include these dojis in your look for a setup. So whenever I see these, I'm extra cautious. Break of the yellow channel moves up, tests the lows. Here creates a new high, first entry long, potential second entry long, and maybe a triple test here. So I saw this and I thought if this is a trade, it's going to be rather aggressive because I'm going to go long into a potential EMA that's acting as resistance now. There is just enough room to scalp out, and I don't even know if I trust this triple test because it pushed down, got rejected, pushed down even further, got rejected, pushed down a third time, got even further than the previous. So it's making lower lows every time. So is this a valid triple test? It's hard to say. So even though you have the second entry long and a potential triple test, it just doesn't feel quite safe. Then of course, market likes to prove me wrong and flash up and kind of laugh in my face. Stops right at the EMAs, but this would have been enough for a scalp. Of course, I'm okay not taking this setup. And then it creates a higher low. So when it creates a higher low, I'm thinking, okay, it created a higher low. It pushed up and out of my trading range, or what I think is a trading range. What gave me hesitation is this could end up being a fail breakout. So it could, next few candles could push prices right back into this potential trading range. So it's something, it's kind of like an almost trade. I need to wait to see what happens. So it comes down, it looks like it's going to break back in, potentially a fail breakout. And then it ticks one tick below, actually two ticks below, and then flashes up. So I thought, oh, this is a failed second entry short. This is a possible trade. It's a little more aggressive because now I also drew this as a potential up channel. This yellow up channel confirmed once, twice, confirmed a third time. So I wouldn't have entered here or thought to enter here because here you don't really have a failure yet. You do have a second entry short with a very iffy continuation. Here you haven't failed yet as well, but you are bouncing off the bottom of this yellow up channel. And here you definitely have a failure. So the way I would have tried to have played this, if I was more savvy, is seeing a first entry short, second entry short, hasn't failed. As soon as it hits here, kind of confirms this up channel and broke above this, excuse me, broke above this bearish candle, I probably would have put my entry at the highs of here. And I don't quite remember how this reacted. I don't know if it would have picked me up and then launched up, or did it just push up all the way through. So I may or may not have gotten this trade, but definitely would have been how I probably would have tried to play it. Price is go move up. It has a breakout here, flushes down, doesn't hit the EMA, and it continues back up. Has a break and meets the high. So I'm thinking the uptrend might have played out. There could be a two leg correction. So it's one leg down and it continues up. So here I'm thinking it could be a spike and a potential channel. So I drew this green uptrend line here and this resistance here, but it doesn't fit very clean. So I need more price action. It breaks out, so it doesn't even, this isn't even important at this point because it's coming right back down now. Technically, you have a new high, first entry long, pullback, second entry long, and then you can see it as a bigger visual, first entry long, maybe a second entry long here. Breaks out. I'm expecting prices to come back and test the lows of this yellow down channel. It hits a consolidation area. It's just in a trading range now. So now I'm questioning if is it going to have enough power. This could have been in the first attempt and second attempt, and now sellers might have been giving up. And so there could be a tug of war that happens in this trading range, but it breaks up and breaks through. So it looks like the bears have lost control and the bulls are pushing in now. Unfortunately, there's no setup. You do have technically have a new low here. It's a first entry short, second entry short. Failure, but the second entry short failure is far from the EMA. This orange up channel wasn't drawn until later, so I didn't really have it to work with. It was actually slightly tighter. It was actually something like this previously. So it was a break and maybe it tested the high, but you don't know that this candle could have, this big green candle could have actually been a follow up red candle all the way down to EMA. So I didn't know that at the time. So definitely no setup there. And it's just getting to the last 10 minutes is a new high. It's a first entry long. Second entry long is a good setup, except it's below the EMA. EMA is flattening out, and it's just too late in the day to try to take a trade because there's only 10 minutes left. And even in the last 10 minutes, you could tell prices are just kind of a little bit, I guess, jarbled. So overall, there was a lot of things happening today for sure. The volume was a lot higher. There was a lot of uh, I wouldn't say high probability setups, but there were a lot of mediocre setups, kind of aggressive setups. There were some high probabilities here and there, but you had to be very careful because either the signal bar didn't quite meet the criteria or the setup just felt a little risky or the EMA was being a little ambiguous. It wasn't quite in the trading range, and the trading range was a little bit hard to determine. So it's mostly just trend channel day. But overall, it was an interesting day. It's a lot of volume. Definitely was it did take a lot more mental exercising today. Felt more mentally tiring to watch this whole thing play out. So hopefully that was helpful.